Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq 100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been a barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Mark Marex, Senior Specialist with Index Research and Development at Nasdaq Investment Intelligence, to discuss Nasdaq 100 performance, particularly FANMAG performance, and we'll also touch on China tech companies. Mark, it's great to see you. Welcome back to Trade Talks, and let's pull up your first chart here for a review on where the Nasdaq 100 is.
Thank you, Jill. Great to be back with you. Wrapping up towards the dog days of summer here in August, and thought we'd do a check-in since we have had a bunch of earnings come in over the last month or so for some of these biggest names in the NASDAQ 100. So I've stuck to the kind of traditional FANMAG breakout here. That's Facebook, Apple, Netflix, Microsoft, Amazon, and Google, showing you the year-to-date price performance. You can see all of these are positive except for Netflix, just down around 2% year-to-date so far. And then Amazon is just above positive, has had a bit of a pullback, a bit of a correction in the last couple of weeks. But the overall average for this group of six is still a very, very strong 21.5%. And that is obviously very crucial for the NASDAQ 100 index performance, which is also close to that level. Last check around 17% up in price terms year to date. The outperformers on this slide, it's Microsoft and Facebook at around 30 to 33% each. And then really Alphabet, right, the holding company for Google, up over 56% year to date. And what I've highlighted here on the left of the slide, sort of in bold, those two numbers there, those are kind of high level aggregate summary numbers for the year over year change in the two most important top line and bottom line numbers for financials with the most recent earnings season. 36% year-over-year increase in quarterly revenue for this group, 88%, so almost a doubling of net income profits year-over-year for 2Q21 versus 2Q last year. And with that, I think we can start to move on and dig into some of the individual company examples.
All right, so Mark, let's pull them up here. What's your first chart?
Yeah, so Facebook and Netflix, the first two that I decided to look at here, you can see really actually on the right side, steadily sloping upward chart for revenue for Netflix. Had a bit of a dip in net income the last quarter, but still 88% up year over year in the second quarter in terms of net income, revenue up a solid 19%. But look at Facebook on the left. Facebook just recently joined $1 trillion plus club in terms of market cap, along with Apple, Amazon, Microsoft, and Google. Just extraordinary performance continuing for Facebook. Revenue up 56% year over year, net income up 101% year over year. Those are like, really early growth stage growth numbers. It's just incredible to look at the performance here for a stock that is worth $1 trillion, still growing at gangbuster type speed.
All right, so we got through Facebook, we got through Netflix. What's our next set that we're taking a look at here?
So the next two, I'm looking at Google and Microsoft next to each other. Google actually has been keeping pace with Microsoft in terms of revenue for several years, but recently has kind of accelerated ahead of Microsoft. You can see Microsoft quarterly revenue up 21% year over year, net income up 47% year over year. Really not too shabby, again, for a company that's worth $1 trillion, that's been around for several decades now as a market leader. But really look at Google. I mean, this kind of explains the outperformance year to date, and even going back into late last year, revenue up 62% year over year, over 60 billion in the most recent quarter, and net income up over 166% year over year. That net income number well above 15 billion for the quarter as well. Again, trillion plus company growing as if it were, a 1 billion or 10 billion early growth stage company on its way to becoming a large cap. Just phenomenal growth continuing for both of these companies, but especially Google.
All right, and our last two, start with the A's, Apple and Amazon.
Yeah, so Apple and Amazon, two very different companies. I think on the right, when you look at Amazon, revenue up 27% year over year, net income up 48%. This one has decelerated a bit because we had the big reopening happen earlier this year, especially 2Q is a pretty good quarter in terms of retail, getting back out there in terms of brick and mortar locations and restaurants and people stepping outside of the home and doing less of the e-commerce thing. But, you know, Amazon is a lot of things beyond just e-commerce. It's the AWS cloud business. It's the logistics business. It's also increasingly, you know, a retail footprint business with Whole Foods and some other locations. Again, trillion plus company, really, really solid growth continuing, even if there's a bit of a deceleration with that reopening. Apple on the left-hand side, similar story. We had a huge spike up in revenues in 4Q of last year as everyone was kind of loading up on smartphone and computer and tablet upgrades. So Apple, again, has decelerated a little bit as well, just like Amazon, but still net income up 93% year over year, almost doubling, revenue up 37%, trillion dollar plus companies still growing like gangbusters, supports the overall price growth that we've seen across the Nasdaq 100, I think, with these companies leading the way.
And Mark, to wrap up here, let's take a look at Chinese tech companies. They've certainly been in the news, and there's divergence of performance there too.
Yeah, this is maybe one of the biggest examples of divergence that I've seen within a sector ever. I thought I would point this out because it's important for people to know that China does have 5 companies in the Nasdaq 100 with US listings on the Nasdaq exchange. These are the 5: Baidu, Trip.com, Pinduoduo, NetEase, and JD.com. But of course, with China, the story's been completely different for a long time. The pandemic pretty under control there with very strict government intervention, and then government regulation really taking a beating on this sector. You could see some of these names were up 20, 40, close to 60% year to date earlier in the year. On average, they are down more than 30% year to date. All of them pretty much in bear markets or serious bear markets. Not really hurting the Nasdaq 100 all that much because collectively they make up only a couple percentage points of the overall index weight. And wouldn't be surprised to see 1 or 2 of these potentially get kicked out this year if this performance downdraft doesn't turn around soon. So very big divergence, China tech versus US tech.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Market Reporter at Nasdaq.